I'm sure you've heard the news. Welcome to Global West. Please subscribe and hit the bell icon for more breaking updates. This month, Beijing issued a seismic directive. Chinese companies must stop buying semiconductor chips from US firms. This isn't just a trade spat. It's a declaration of technological independence, marking a new era of economic decoupling between the world's two largest economies. The move is a direct response to years of US restrictions and blacklists targeting Chinese tech giants. Now China is going on the offensive, betting it can endure short-term pain for long-term self-reliance. US chipmakers like Nvidia, Intel, and Qualcomm, who've relied on China for a huge chunk of their revenue, are suddenly cut off. The trigger? A mix of new US export controls and rhetoric from Washington that Beijing found intolerable. This is China's boldest step yet to break free from American tech dominance and accelerate its own innovation. The world is watching. Can China build a self-sufficient tech sector, or will the gamble backfire? The era of easy globalization is over. We're entering a time of economic nationalism and weaponized technology. China's chip ban forces nations and companies to pick sides, splitting the world into rival tech ecosystems. The decision made in Beijing will shape not just the price of your next smartphone, but the geopolitical landscape for decades. The global order is being rewritten, and the outcome is anything but certain. The road to China's chip ban was paved with tariffs and tech restrictions. The Trump administration escalated trade tensions, slapping sweeping tariffs on imports from over 90 countries, not just China. At the heart of this strategy, blocking China's access to advanced semiconductor technology. A new executive order now bars US chip software suppliers from selling to Chinese entities, striking at the core of China's tech ambitions. Meanwhile, the US threatens 100% tariffs on all foreign-made semiconductors, unless companies build factories on American soil. Some global chipmakers like TSMC and Samsung are exempt if they invest in the US, creating a two-tiered system. The result? A fractured global trade environment with allies and rivals alike caught in the crossfire. Even close partners face tariffs and new barriers, as economic partnerships take a back seat to geopolitical power plays. This aggressive approach has set the stage for China's dramatic retaliation. China's chip ban is a calculated response to what it sees as an existential threat from the US. Years of blacklists and export controls convinced Beijing that relying on American chips is a dangerous vulnerability. The ban targets US giants like Nvidia, Intel, and Qualcomm, companies that once earned up to 40% of their revenue in China. By cutting off this market, China aims to inflict real pain on the US tech sector and show that the tech war has consequences for both sides. The policy is about more than retaliation. It's about survival and ambition. China's Made in China 2025 plan calls for self-sufficiency in critical tech, and this ban is designed to supercharge its domestic chip industry. Firms like SMIC and Huawei's HiSilicon now have a captive market. But the challenge is steep. China still lags in advanced chip making. The gamble? Sacrifice short-term performance for long-term independence, betting massive investment will close the gap. China is betting its future on breaking free from US tech, and it's all in. The fallout for US industry is immediate and severe. Chipmakers like Nvidia and Intel lose access to their biggest growth market, forcing layoffs, R&D cuts, and strategic overhauls. The pain spreads. US soybean farmers, already battered by trade wars, now face losing their top customer as China looks elsewhere. Retailers and consumers aren't spared. Tariffs drive up prices, and companies like Sony are already raising costs on products like the PlayStation 5. Apple, under pressure, pledges $100 billion to US manufacturing. A move as much about politics as patriotism. The message is clear. Companies must now navigate not just markets, but the shifting demands of policymakers. The US-China split is reshaping American capitalism, forcing businesses to make billion-dollar bets on political wins. The interconnectedness of the two economies means no sector is immune. The cost of decoupling is being felt in boardrooms, farms, and living rooms across America. China's chip ban is the boldest move yet in its drive for tech self-sufficiency. Years of US sanctions have turned a long-term goal into an urgent mission. The government is pouring billions into domestic chip makers like SMIC and YMTC, guaranteeing them a massive home market. Protection from foreign competition gives these firms room to innovate and catch up, but the technical hurdles are immense. China still depends on foreign equipment and expertise, and the US is working to block access at every turn. Success isn't guaranteed, but the pressure is spurring rapid innovation at companies like Huawei and Alibaba. In the short term, Chinese chips may lag behind, but the forced march toward independence could create a new tech powerhouse. The world may soon see two separate technological standards, one Western, one Chinese. The US-China tech war is reshaping the global landscape, forcing countries to pick sides or risk being left behind. Allies like the EU and Japan face new tariffs and uncertainty, while developing nations are caught in the crossfire. India, hit with tariffs for buying Russian oil, sees China step in to deepen ties with Moscow. Brazil pushes back against US trade probes, signaling a shift in global alliances. Export-driven economies are suffering as supply chains fracture and trade slows. Even small disruptions, like Nordic postal services halting shipments to the US, show how deeply the standoff is fracturing global logistics. Nations and corporations must now choose a line with the US-led tech bloc, or pivot toward China's emerging ecosystem. The result is a more divided, less efficient, and riskier world. The future of the global economy is uncertain, and the stakes are enormous. For consumers, the end of cheap, globalized supply chains means higher prices for everything from electronics to clothes. Some US jobs may return as companies reshore factories, but export sectors will suffer as China closes its doors. China's tech sector will boom, but its export industries could shrink if Western buyers turn away. The biggest shift: a world split into two rival tech ecosystems, with incompatible hardware, software, and standards. Innovation will slow, costs will rise, and global business will become more complex. The choices made in Washington, Beijing, and beyond will determine whether we see managed competition or deeper fragmentation. This isn't just about trade, it's a battle over the rules and values that will shape the 21st century. China's chip ban is a turning point, and its impact will echo for generations. The world is watching, and the next moves will define our future.